Well, our topic is Fintech over the next 10 years. And I thought we could try and just get above all the day-to-day noise in this topic and see if we could identify one or two overarching trends that are going to carry us through the next 10 years. Yuri, could I start with you?
So Syndicator is a fintech ecosystem that is developing hybrid intelligence. And our major business is asset management for the moment. Previous 4 years, we were an analytical company, and we were developing this approach, unique approach to decision making, which we called hybrid intelligence. This is the combination of human and machine intelligence. We have 140,000 of analysts that are working in our ecosystem and making predictions every day, predictions on financial market, mostly digital assets market.
Our technology is just that. It's an infrastructure solution that acts as a middleware, an interoperable layer between existing financial services providers and those that desire to enter into the market, presumably in a distributed ledger environment space. We're the technology that will enable that transition, allowing U.S. floating rate treasuries funds, gold-backed funds, spider index funds, a whole host of different types of traditional publicly traded assets that are well-known, well-priced on the London Stock Exchange, the New York Stock Exchange, to be able to bring those assets into the digital space. And this is where we see the next 10 years of the market evolving, going from traditional legacy financial services to next generation, more convenient, more transparent, more accessible financial services.
So I'm one of the founding partners of VentureSoup. We're a VC firm based here in Dubai. We've got a global portfolio focused primarily on the US, India, Africa, and the MENA region. We've started to focus a little more of our attention on Asia. We're primarily an early stage investor focused on seed and Series A, although we've started to now double down into Series B and Series C and later stage opportunities.
John, if I could turn to you. There was a view 2 or 3 years ago that legacy banking institutions were on the verge of imminent collapse. This, of course, has not happened, and we've had the network effect. I think that the meme is now bank-fintech partnerships are crucial to the future of banking. How do you see this evolving? Do you see that there's significant disruption down the path, or do you feel that the partnership angle is going to be the one that's going to...
I definitely think the partnership angle is the approach that's going to prevail. Having the flexibility to adopt and integrate via API additional capabilities that can offset the current infrastructure that they have to maintain, bridging them from legacy infrastructure into next generation DLT environments in a very systematic way. And in doing so, they find that they can gain access to additional partners that are able to operate in this network environment. So as essentially an interoperating service, we're able to bring together multiple banks, multiple exchanges, multiple custodians, multiple asset managers, a whole host of different participants in the financial services spectrum, but to provide them an opportunity to interoperate.
I think to build on this theme, and one of the trends is obviously the relationship of the conventional and the startup sectors with so-called big tech. In other words, Amazon, Google. This has already been discussed in the course of this conference.
I think it's going to be a trend that you're going to see more of. Every tech company wants to be a fintech company. You're talking about companies like Google or Amazon or Apple.
Google credit card.
Exactly, that are getting into banking and other sort of financial services, et cetera. These are companies in a non-fintech related world that have mastered everything that you need to become a unicorn and then some. Product market fit, great distribution, a very sticky product, alleviating friction in order to expand their share of the market. And now, vertically integrating into people's wallets or anything around financial services is a natural expansion move for them.
I think it was said that, and a criticism actually, that startups, as a generalization, were often proposing solutions for problems that didn't exist. And this caused a lot of friction, a lot of startups, frankly, to go out of business. Do you see this, again, the network effect ameliorating this difference to some extent, or do you still see there's a friction there?
Well, it's definitely still a friction. It was highlighted again earlier where the path to capital formation, if it's not solving a problem in the legacy world, it's probably not going to solve a solution in the distributed ledger environment as they go out and attempt to seek capital. But the ability to expose these opportunities through a network to new markets, to potentially help to scale, can become a very viable outcome.
I wanted now to look at two very important segments of legacy banks' activities. And Sunil, perhaps I could ask the first question to you. We've had a wonderful panel earlier on this afternoon on tokenized securities. We all know crowdfunding is developing very fast. You're in fact in the capital raising business yourself. How do you see these developments? And do you see that ultimately your own business is going to have to adapt to some of these new capital raising techniques?
Yeah, absolutely. I think there's peaks and troughs like any other new player in a market. So I think a few years ago, crowdfunding was obviously a fairly common buzzword. Everyone was talking about how it would completely disrupt venture capital. With that said, I think there will always be a move to quality, and so I think platforms like AngelList or ourselves here in the region that are not typical kind of like crowdfunding, but more kind of syndicates focused on sophisticated investors is probably the hybrid model that will at some point disrupt traditional venture capital probably in a more meaningful way. But I think you also have other things like even just the rise of the family office. Family offices that have been investing into VC funds for the last 30 years in multiple vintages are now saying, we have the levels of sophistication required to actually go make direct investments and we have great deal flow and we can do this ourselves. So they'll, instead of taking, that chunk of capital and putting it into 5 different funds, they'll, split that in half and invest in a few VC funds, but save some for co-invests and do those deals directly. And we've, seen those, been part of those deals with highly sophisticated family office groups. That's probably more where the U.S. or the U.K. or Western developed markets are, I think, but you're starting to see it here and in other markets, particularly in Asia and India and some parts of Africa as well, where you have large family offices that want to get their hands dirty and actually do deals direct. And
firstly, in terms of algorithmic trading, I think that's something that we just talked about actually before the panel, and that your company is involved with. We can now get AI often combined with machine learning to devise trading strategies without any human intervention. And of course, there's no behavioral aspects to that either. I mean, how do you see that developing in the markets?
Definitely, I can say that about 70% of capital is being managed with some usage of systems, algorithms, automation, and they have very different level of complexity, and always they require some human interaction with these algorithms. And we see that emerging role of being quant trader and the next level of being meta quant trader. So these traders, these humans who are operating with lots of different algorithms and meta algorithms on top of them, and each of them is using different techniques of absorbing different data from different sources, and each of them could be called a separate AI agent. So this is very hybrid approach, and more players like that are appearing on the market.
Thank you very much indeed. Thank you for your discussion.
Thank you.